All right, this is Coach Butler with Trade Academy Pro. It is August 26, 2024. On tonight, we're going to be dealing with how to automate your account. We're going to be dealing with automating your account. Um, as we look at the how this came about automating your account, a lot of our students that we have, or members, excuse me, that we have are either work, busy moms, managers, all the way across the board, real estate agents. Some have the time to sit in front of a computer when the market opens at 9:30, or sit in front of a computer when it closes at 4. Um, that's not everyone. So since that is not everyone, we're going to focus in on how to automate your account. Now, keeping in mind your brokerage account, whether it's Fidelity, Fidelity has, let's see, Trade Armor, or you have, um, I think it's Think and Swim is lost my train of thought. But each one of them have a platform where you can elevate your trading, as far as um, automating your account for entries, automating your account for exits. And so that's ultra important. Uh, uh, Fortunately, this is part of what we do with Trade Academy, with Trade Academy Pro, is to help you learn how to automate your account. And we're going to be dealing with 5 fundamentals for the next few weeks on automating your account. Some of it may seem, we'll probably recapitulate some things. They'll seem as if we're going over it, because I want you to truly understand how to get your accounts automated. Ameritrade, that's Thinkorswim. It took me a minute there. Ameritrade is Thinkorswim. So for this class on tonight, I believe everything starts with your fundamentals. Everything starts with your fundamentals. So for the next few weeks, before we get in depth into how to get that account automated, you're going to have to do the busy work. And the busy work is, um, you know, what stocks am I looking at? What metrics am I looking at for that stock? How do I level up? How do I put myself in a position that this stock is the one that I'm looking for? How am I looking at it? And so, as we get into this, we're going to be using tonight. We're going to be using, of course, our two training apps. One is FinViz, and of course, the other one is TradingView. Um, your If you have Webull, I haven't looked at some of the others. I talked with one of our members that has Moomoo. Like I said, you may have Fidelity, you may have Webull. It's a host of brokerages out there, Schwab, so on and so forth. But for the most part, most of them are going to give you the same platform that we have here. Now, keep in mind that TradingView has a screener also, um, and it's fairly good, fairly simple. I think it's a pretty good, but for training purposes, if you find out where your platform is in your platform, where you can manipulate these um, where you can manipulate these categories that you want, um, trailing stop losses, where you can automate your setup points, alerts, so on and so forth, alerts when to come in, also alerts when to come out of a trade or an investment. Then that's what we want to do. But like I said, these are the basics, and they should be able to. It should be, of course, your platform may be a little bit different, but the information should be about the same. So on FinViz, we want to take an opportunity. Now, FinViz, I love FinViz because FinViz gives you these powerful host of powerful tools. The only downside with FinViz is that since the app is free, since the app is free, you're going to get inundated with. I say you're going to get inundated with commercials if you want to look at it like that. They're going to have tons of ads bombarding you with tons of ads until you buy their service. For our training purposes, we really don't need to buy the services. Um, so we encourage you to use the app, work around the app if you can. If you want to purchase the app, we don't discourage it. But there's again so much more you can do with your money as far as investing. So when you open up FinViz, this is what you're looking at here, and you can see me closing out all of these these ads and everything. But this is what you see on the front page of FinViz. The next thing that we want to look at, and you can look at the heat map. This is this area over here. Some of the gainers and losses. It gives you what the Nasdaq did, the S&P 500, um, gives you what some of the markets within the stock market did, um, what the high lows are, 50-day moving averages, 200-day moving averages, so on and so forth. So, um, like I said, very, very powerful tool. Major news that might have gone on throughout the day. Tickers, like I said, up and down, also giving you a look at some of the um, strategies as far as whether it's a wedging up, wedging down, whether it's going sideways, so on and so forth. Great, 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 great tool. Like I said, giving you, like I said, well, they call them signals, so we'll call them what they're calling signals to stay within the context of the app. Also, so the next thing that we want to do, and keep in mind, it gives you all of these beautiful things, forex, um, right here, bond market, futures. But the thing that we're here for right now, as for this particular piece of our training on how to automate, is we're here for the screeners. We're here for the screeners, and you have some categories that run across here, descriptives, the fundamentals, your technicals, news, your ETFs, and that's only going to be ETFs that are in the exchange. And then you have all. You have all. So now, as a as a member of Trade Academy Pro, what we want to do, and sometimes, unfortunately, this does not does not mean that another country won't get in, but for our purpose of our training, we always use US. And let me go back to all, and you'll probably see the total down here change from 95 to probably 8,900, somewhere along those lines. So these are filters. So let's go to US. That's our first thing that we want to do. 8352. So that's number one. Then we want to look at our volume, our relative volume. What we want to look at. Well, actually, before we get to relative volume, and this is one of the ads that I need to get out of the way so I can see a little bit better. And it is not going away. So you're going to deal with this, buddy, uh, because you are using our platform for free. So you're going to have to deal with it. It is not going over. But anyway, let me go in here, see where our volume is. We're going to, all right, we're going to go with average volume. um, let's go to average volume of over, let's go over a million. And that's going to cut us down, as you can see, down to 1622. We can quantify which exchange we want. We're working all the exchanges, and this is what we were trying to get to. Was a market cap? Do we want large, small, medium caps? Keep in mind, it's just going to depend on the volume and what you're looking at. Mega, mid, so on and so forth. But for our trading, we're going to look at small caps, 300 mil to 2 bill, and that drops us down again to 258. Next thing that we want to look at is going to be our moving averages. We want to look at our moving averages. So our moving averages priced above the 20-day, same thing, price above the 50 and price above the 200. That narrows us down to 87. Like I said, great tool to help you to filter out some of the things you want and some of the things you don't want. All right. So now it has elite trade only. I think that's just another one of their um, selling points on their platform. That's not what we're after. We're not after that. So now um, we're going to also look at. I want to look at stocks that are wedging up. And again, I got this guy here in front of me, so we're gonna have to go back and then come back and go back so we can get in here. EPA, our sales growth. Oh, they've gotten real dirty with this. Okay, let's see if we close that up. Why am I seeing this? I don't want. Okay, it's just it's not gonna operate right. Plus, I have a new system set up here. Let's look at our EPS next 5 years. That's a little bit further out if we're trading than what we want to do. We got our moving averages performance. We want to look at performance of up in the last week. Okay, that brings us down to 72. All right, thank you so much. EPS growth for next year. If we were looking at long-term trades, we would look at EPS growth for next year, sales, return of investment, gross margins, so on and so forth. Um, Also, you guys know I'm crazy about the RSI, so we're going to look at not overbought, because we want to look at breakouts. We want to look at breakouts, not overbought at 60. That is not where we want to be. Not oversold at 30. Oversold at 30. Let's go with oversold at 30. And that knocked us out totally. So let's go back. Overbought at 60. Let's see what we have. We got 41. And so what I'm looking for is for one or two that will gap up for us. We're looking for a gap up. And that is also in here. Average volume over 2 mil. Yeah, we can, well, we're looking at small caps. Average volume over half a there you go. Over 500,000. Um, Also, let's see, we got our moving averages. We got our moving averages change from open. We're going to, here we go. So we're going to look at wedging up, just wedging up. That gives us 17. So as you can see, with all of our filters in, and now it wants to go over with all with all of our filters in, we have a little bit better picture of what we want to look at as we're working on our automating our accounts. All right. So there's several I want to give you. If we are an oversold, let's look at price. If this is for penny stocks. So if we were, let's wipe the slate clean. Let's wipe the slate clean. Let's wipe the slate clean. We're gonna go back because I want to give you, depending on what you're looking for, is what we want to work on. Any, like I said, out of everything that we have, the US is going to apply to all that we're doing. Let's see if I go to home and come back, what will it do? Let's go back. Did it reset? Go to all. Yeah, so it did reset. So let's look at, and I got my little cheat sheet up here. Let's look at we have screeners for options, and we'll be talking about that. Let's go with if we're looking at long dividends, the best screeners for breakout. So best screeners for breakout, let's go to the 20-day, and 20-day is going to be priced above, not crossing, price above. Same thing with the 50, price above, and the 200, price above. And those usually, so that brings us down to 57, 55. Then we're going to look at our 200, 400-day moving average, our 50-day high low. So 50-day high low, we're going to look at our new highs. We're going to look at new highs. So we're looking at our new highs on the 50-day high low. We're looking for new highs. Let's say let's say 5% above high. That's going to knock us down to 1,000. Then we're going to have return of equity, return of equity, return of investment, revenue, return of equity. It's been a while since I've used this one. Return of equity. Your next one's going to be your return of equity, and we're going over 20. And debt to equity, I'm just giving them to you in case you see it and I don't. Return of equity. Look like and they haven't changed anything. It's been a minute since I've used this. EPS. Gross sales, return of assets. Okay, here we go. I think this is going to be it. That's going to be let's go to our average volume. Our average volume right here is going to be over 100K. 100K to a mil. That's going to bring us down to 465. And let's see. Not after our high lows, all-time high lows. Return on equity. I may have to switch over to the technical on that. I can't see it. Return on equity. And I apologize to you guys for not having this down pat. Relative volume. No, not looking at relative volume. Look at ROI. ROE rather. Return on equity. For training purposes, not growth for next year, sales for next year, return of investment, gross margins. Let's go with return of investment. And return of investment, we're going to go under 1, over 20, I'm sorry, over 20. over 20. That brings us down to 16. I'll have to go back in and find the return on equity, and you may see it, but we're um, here we go. Return on equity. My goodness gracious. Return on equity. Return on equity is over 20. That's over 20, and that's going to take us down to 13. And so this gives us 13 stocks we can work with. Let's go to our charting. Let's go to our charting, and then we can proceed to work on which stocks we're looking at. Keeping in mind, um, we're looking at a 20-day moving average, our 50-day high low, um, volume 100,000 to a million. Uh, Even if we wanted to go again, market cap, you can decide whether you want small caps, whatever you're looking for, small cap, large caps. And most of you guys that are starting, you guys love the Nvidias, Microsoft, so on and so forth. So we'll say large caps, those large cap companies. That really brings us down to three. For training purposes, we're gonna just say any. We're gonna keep it at any, so we can deal with any of them that we need to. So now you can see we have 13 stocks here that we begin to automate. 13 stocks that we begin to automate. Again, we're not going any further tonight other than giving you some of the settings for if you were day trading. These are settings for day trading, looking at a breakout. These are all keys for a breakout. Right? Because of the way they've trending, we're looking at the breakouts, the head and shoulders, the upward trends. Let's take a look at the first one here, Buckley Incorporated, and you can see a lot of consolidation. So we can have a clear picture. Um, let's go on and get go to Trading View. Let's go to Trading View. Let's go to Trading View. And that was Buckley BKE, because again, we're not getting a solid, clear picture with FinViz, with my ads in the way. They've caught on to me, guys, that I've been using their platform for free. So let's go to BKE. Okay, BKE. Buckley's Incorporated. And let's take a look at it. I think and right now, um, let's kill the extended, and we got it into 15 minutes. Let's take a look and see how it looks over the course of a year. If this might be one, let's set up our our volume. Volume. All right. Yeah, let's set up our volume. Let's take out we're going to take out the golden cross, and for training purposes, indicators, for remove four indicators. And I'm gonna come back. We'll come back, put the indicators back in. So for this exercise, again, we're going with volume. We're going with Coach Butler's favorite, the RSI, the relative strength index. Um, Also, we're going with the double EMA. All right. And now you may want to take the volume out. I think if you got the free version, I think you can only use two indicators and the super trend. So we can, for training purposes, we can actually take out, I think a double EMA can be taken out. We're going to, but for training purposes, we're going to keep it in. But I'm just letting you know, you're going to have to make a choice. You're going to have to make a choice of one or the other as far as uh, of only having two. Again, I pay for the version because again, we do use it for charting. We use it for training. We do use it. So the other thing with your double EMA, let's go to the settings here in the double EMA. Let's go to our inputs. Our inputs. Let's see. Give me a minute, guys. Give me a minute. We need to change the length to 200. Yeah, change our length here to 200. Change that length to 200. And then we change the color already. And then on the super trend, we're going to change, our ATR to 12. Change our ATR to 12 and hit OK. So now what we've done here by changing it to the 200 on the double the DEMA, what we have done is we've established a 200-day moving average that helps us as we look at this chart to everything that's going to be above our white line or 200-day moving average. It's going to be a buy for us. When it falls below the white line or headed towards the white line, that's a sell. And you can see that also in the RSI as we meander through. So for Buckley Industries, if we were just looking at this in the long term, we were looking at it in the long term, everything that you can see, this would be a long-term buy because you don't see a whole lot that's hitting below the white line or below the 200-day moving average. There's not a lot. But if this was a stock, you see it consolidated, or as people want to say, it's running sideways. But it is consolidated. And so, as you can see, it's got more. It's got the sellers have taken over more than the buyers have, in other words. Okay, as you can see in the volume, it's relatively probably almost even. But what we want is this right here, that breakout there. And also, we got a small breakout here. It goes up. You see, it's not really a solid green. It's kind of bumping up very slowly. And then we have a green here. So we're looking for it to gap up. And that's what we're looking for, the trend to gap up. So now that's on the daily. Let's go to the 15-minute. And I think it's probably in a downward trend on the 15-minute. On the 15-minute, you can see it on downward trend. Keep in mind what we were shooting for is we are looking for that breakout. We're looking for that breakout, that when it comes down here, it's going to be overbought. And so we know that the next move is going to be up. So we're not, that it's in a sell mode does not get us too excited. Does not get us too excited, because we understand that the next move that it's going to make is going to be in an upward motion. It's going to be upward. So that's what we're looking at. We're looking at it doing like this. Once it has hit 30, so 30 is our support line, that once it hits support, we're looking for a breakout. Hits support, we're looking for a breakout. Hits that 30, and because that's what we're asking for. We're looking for we're looking for that breakout. And you can see in the pattern here, probably does the same, bounces off the 30, so on and so forth. That's why I love the RSI. Yes, I'm gonna continue to preach RSI, RSI, RSI. Yes, I am, because I believe in RSI. Let's take a look at some of these others that we've already we have BMA Banco, and that's out of Argentina. Let's see. We also have CSL, Chrisley Company. Let's take a look at Chrisley Company before we get ready to shut things down. C, I think CLS, was it CLS or CSL? Yep, Chrisley Company. Let's take a look at Chrisley. So in the 15-minute, you can already see with what we were looking at, it's gapping down right now, gapping down, or in a headed towards that 30, that support. Hasn't quite gotten there yet, but we're gonna put all of it together in our next classes to see what we're looking at. Come on, there we go. That's what we're looking for right there. If we take a look, let's take a look at the daily on this one, because this bad boy here looks like it could be a fairly good stock as far as long term. Let's see what the dividends are. 85 cents on the divs, 85, pretty consistent on the divs. Dividends, $1. So a little bit of a breakout over the last year. It's 2x over the last year. Let's mark this bad boy, because again, we are dealing with our own stocks, looking at our own stocks. And so as we run across these to put on our watch list, this is a very nice one here. You can see the trend on this guy here since you can see the trend since, let's go back. You got a buy on November of last year, and everything has been in an upward mobility since then. Just about everything. Let me move our arrow down a little bit. Everything has been above that 200-day moving average. Up here, you can see you got a little bit of a drop up here, but for the most part, this has been Chrisley Company Incorporated. We're going to put that on our watch list. So let me write that one down. I know we made class, but we run across stuff as we're taking a look at it. We're talking about 9,000 stocks. So so when we get a chance to run across one or two, we want to make sure we have an opportunity to do some research on it. And so let's go back to our screener. As we're looking at Chrisley Company, let's see what all of the technicals and financials say about them. Market cap $19 billion, fairly decent sized company. Their sales 4.9 billion. Let's see, what does Chrisley do? Chrisley Company, building products, equipment. This probably falls in the line of what we were talking about in our last class, as far as companies that will help to rebuild after a natural disaster. So Chrisley is looking fairly well here. Goldman have them as a buy, even at 450. You can see back and they have slowly been going up since 2020. This is a solid look so far, like a solid company. You've had 3 downgrades since 2020, but everything else has been either an upgrade or neutral. A lot of buy and holds. Even on the downgrade, you had buy and holds, but keeping in mind it has 4x'd since 2020. I like this company here. Christie gained from business strength. Okay. I'm just scamming the news real quick on it. 3 mid-cap stocks that could deliver 300% returns or more in 20. So they have Christie also as one of those stocks that could gap up 300%. And by 2026, in the next 2 years, looking at what they have done so far, that I don't think they're far off from that, because we're already looking at a company that has 4x has already 4x from 2020. Let's take a look at some of the other financials. Um, as far as the last 3 years, total revenue, 2022, they've dropped revenue, as you can see, going from 544 bill. Last year was 45, and right now they're at 49. So they're probably going to end up getting back up to the 45. I bet you this is probably the drop here was probably a capital project or something major they did in order to increase for the next year. Their sales year over year dropped off in 23, and they look like they're on pace to get back where they were. The gross profits are actually not too bad, exactly where they are right now. Same thing with their sales. Sales are above right now. So let's see what these guys do. Manufacturing, distribution, building envelope products and energy solutions, Chrisley Materials, CCM. We're going to come back and take a look at that. And Chrisley Waterproof Technology. I've never heard of this company before, but I'm impressed with what I see with the financials. I'm impressed with what I see as far as what the company has done, what it's doing. Market capitalization has increased. It actually sitting there flat yet last year and so far, but you're up $4 billion in your market cap, so not too bad, not too shabby, not shabby. Let's take a look and see what we have as far as insider trading. Insider trading looks to be a little bit all over the place in July. They exercise options. These guys know that this stock is going to boom. This stock is booming. It's booming. It's booming. And the insiders trading, the CEO, the VPs have capitalized on that growth. And they're exercising options, also selling, getting their money and run, so on and so forth. So this one goes on the watch list, guys. I know it's a little pricey. I wish we could have got into it in 2020 or knew about it in 2020. But that's why you run these scenarios. You run these scenarios to find gems like this in your for your watch list, and also as you are getting ready to automate your account. This is a nice long-term stock that you could, like I said, thus far, just in the yearly, has gapped up 200x. All right, let's take a look. Let's take a step back, take a look at one more, and then we're going to get out of here. That one goes on our list. Let's take a look. Decker Outdoors, footwear and associates and accessories, excuse me. 24B. Here is Hackers Group, information technology. This is a tech company. We had building material. Just trying to decide which one we're going to take a look at. Let me take a look. Yeah, we'll take a look at Hackers Group. Let's take a look at Hackers Group. HCKT, 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 Hackers Group. Let's take a look at them. Nice stock, under 50. Very affordable stock, as you can see. A lot of volume is underneath that 200-day moving average. But also, this gives us an opportunity to take a look as the stock is projecting in a downward trajectory, uh, we can see that right now it's the the you can see all the price action right now is above that 200-day moving average, and since July 16th, about a $4 move. And so this would be a very good one for us to look at as well, to put on our watch list for our training purposes. um, let's take a look at some other fundamentals. If we were to get into it, an 11 cent, not too shabby. 11 cent, uh, a return of investment for a stock this cheap. That's not too bad. 11 cent for your dividends. Let's see what they've done as far as earnings. Surprise, about a 17-cent surprise of expectation of what they were expecting um, this year. So starting last year, about a 0.02% of surprise, or $1.513 million surprise. That's a good surprise on your earnings. Same thing here, 2 mil, almost three, on above 50, 250 on actual report and earnings. Um, Same thing here. So this company, Hacker Group, seems to be a very upward mobile company as well. And so we would put that on our watch list as well. Let me kill one of these RSIs. So as I said, the as we're looking at the looking at automating our account, this is the kind of stuff we're looking for. If I was going to, if we were looking at the gap up, and this is on the daily, but let's take a look and see what it's doing on the 15-minute. Like I said, not too shabby on the daily, long term. But as you can see, what's going on the daily. Let's move that one down. Come on, move down for me. All right. We're gonna move back up here. So right now, everything that you can see is below the 200-day moving average on the double EMA, and it's going in the direction we're looking at for it to go, because we want to catch it when it gets ready to break out. You can even take an opportunity, if you look at your daily, take an opportunity and play with this and see if it does the smelt test for the double EMA. You use this as a trainer to see if it takes the smelt test for the double EMA, if it qualifies for the not double EMA, I'm sorry, but the VCP. I apologize for the VCP. That's all I can say. I can see right now what it has done and where it's going, and but I want you guys to have your own experience with it to see what it's going to do. Well, that is all that we have today for our class. Again, we found a diamond in the rough, and CSL. Hacker is not too bad. It's nothing I really want to put on my watch list. I'm not super impressed with it. Will Like I said, as you go through and find that perfect setup, the other side of this is we got market cap. If we were going for gap ups, you could go for a percentage of gap ups you're looking at. Also, price target, price target. So you may want, let's go to price, excuse me. You may want stocks that are, that are way up there, that $400 stock, you may want penny stocks. Let's take a look. I don't think very many of these are going to be penny. We had 11 that are, let's see, we want price over $10, price under 10, only two under 10. Let's go price. Let's say price under 50, price under 50. So we have seven that's under 50. Again, as you go through and work this filter on your screener, and like I said, most of them have these filters. Work this filter on your screener. It will help you to curtail, because again, if you know that that the one we just looked at, CSL, is kind of out of your is pricing you out of the market, even though it might be on your watch list. It's a good one. Maybe it's one later on you can capture and start to buy in. Um, but it may be a little bit too high end. That's the other one that you want to look at. You want to look at your price. Look at your price. Where is it sitting at right now? And look at your price, and your price will help you to quantify. Even though you have all of the other fundamentals in the filter, you want to find that stock that's going to be right there in that price area that you want it to be. Let's take a look at one more, since we did that. I think we already looked at the HCKT, where I look at Hackett Group, Pace Signal, Bank of NT, Butterfield and Sons. Let's take a look at that one and see what we're working with. NT, NTB, NTB, NTB. Okay, let's take a look at NTB. And so, like I said, as far as we're looking at the annual on this, great stock if it was something that we were going to stick with long term, not very pricey. Closed out today at 38.40. You can see it is gapping up. It's in the gap up. If we're taking a look at the taking a look at the come on, baby, at the annual, it has been pretty consistent since November, moving up. In fact, let's take a look and see what kind of movement do we have. Like I told you guys, I got a new computer, so I'm I'm trying to get used to the buttons and where everything's at. My old computer kind of washed out on me. But you had a $15 move, $15.63 move since November, 62 cent, 62% move, not quite 1x yet, but well on its way. So this is another good one, like I said, under that $40 range. The other side with let's go back. For my option gurus, here is also where you can find out where you're not wasting your time. You can see if a stock is optionable as well. So the option took one of those out, because we had seven, and it took one out, and the one I don't know which one it took out, but anyway, so you can see that these are optionable also. So we're talking about that sweet spot where the stock is where we need it to be. Also, we're talking about price wise, if we were going to buy it straight out, buy shares straight out, or if we were going to day trade or swing trade, the options off of this. This also helps you to identify if these are optionable. The other thing is, so this is the setup that we have for breakouts. And like I said, again, if we wanted to see if it was just gapping up, just what's gapped up, then it breaks us down to 4. Great filter to keep us consistent, to keep us, and right before we get ready to automate, we want to identify which stocks we're going to buy to automate, because we don't have AI, we're not using AI, but we're using our fundamentals to make a profit. We're using our fundamentals to set ourselves up that we can see consistency what these stocks are doing. Now, if you're day trading and you're looking at AI and all, that's all fine and well. Those some of these programs can be quite expensive. Coach Rob and I looked at some a few years ago, running anywhere from $15 to $3,000. We would have had to increase our profit margin. It would have had to increase our profit margin based on what we were doing by 13 to 20% in order to make up what it would cost us for that program. Where you setting up your filters, you're doing what the AI cannot do, because you can think, you can see, and everything. And keep in mind, the only thing the AI is doing is taking information that it has and answering a question. So you're taking information that you have and you're answering the same question with your start, which is your screener. And so we'll come back. We'll deal with the screener on next week. We'll look at buy and hold some of the large caps. I'm looking at my sheet over here, but this was for breakouts here. So this is what you want. You can take a snapshot of that, look at how you want to do it. You want to gap up, how you want to gap your 220-day moving average above 50-day moving average, 200-day simple moving average, your high low. Like I said, let's just take that out and you'll see that gets us back to 13. Where you want your price, our price under 50. You may want to do your price under 10. Let's see where that puts us at, only 3. And so so it starts to filter out based on what you're looking at, your average volume. What are you looking at as far as your volume? Are you looking at something that's optionable? Because let's see, if we take out the options, we should have 1 or 2 move up. Return of investment, ROI. Where do you want to be as far as return of investment? Because again, we're looking for breakouts, but again, we want to make sure that the stock is going to be profitable, even if we set above 5. And then your return of equity. You want return of equity over plus 20%, over 20%. So this is what we're looking at for a breakout before we automate. And you can set up your alerts based on what we have here, because all these are hitting the marks that we've set up in our fundamentals. It hits the marks of where we're looking at, under $10, so on and so forth. It's penny stock. And so when you set up your alerts, you set up a sale where if it hits a certain point, it will generate a sale for you. And you'll also set it up where it once it gets to a certain point, if it starts to back out, it hits your stop loss where it would automatically get you out of the trade as well. So this is our first part, is our screener. We're going to hit the screener again on next week. This is, like I said, this one is for breakouts and under $10. We'll look at next week again. Screeners, we're going to hammer screeners, because this is where you find your needle in the haystack. This is where you find where you're going to automate. All right. So this is Coach Butler with Trade Academy Pro. Remember, we are where beginners become winners. I hope you guys have a wonderful, wonderful night. Have a wonderful, wonderful evening. And remember that we teach principles, not prosperity. I'm all about principles. If we can teach principles, if you can grab hold to the principles, then you can become profitable in your trading, in your investing life. All right, guys, you all have a wonderful one. Again, this is Coach Butler with Trade Academy Pro. And on next week, we'll jump back into our screeners. So let me say adieu and good night. Take care, guys.